Well, thank you, Leanna. So the issue of taxes, as we know, is huge domestically. None of us like to pay taxes, but most of us do. One, because we're terrified of the IRS, and now we find the IRS isn't collecting all the taxes they could. How can they find me when they can't find those corporations? They got their eye on me, believe me. But listen, I would also like to note that today there are hearings in the Senate Permanent Subcommittee on Investigation on HSBC. It's the world's largest bank, and it turns out it too is a tax haven or a facilitator of tax fraud, tax hiding. So if it's true of the largest bank, you wonder about the smaller banks. Maybe the small banks are good. Who knows? But with that, I would like to ask the panelists if they would like to comment on each other's remarks before going to the audience.
Well, actually, I would. I just want to talk about something that that has come up in the panel, which is, I can be, corrected because I'm not a tax expert, but I do want to talk about something called the Delaware loophole. And there's many Delaware loopholes, but I'm going to talk about this particular Delaware loophole, which is when a corporation registers in Delaware, what a corporation will do is they will put a lot of their things called intangible assets in a subsidiary that's registered in Delaware. An intangible asset is a thing like a trademark, leases, things that are not sort of physical, but for which they derive profits. The profits in Delaware are not taxed, so the corporation can be doing business elsewhere, but the assets are registered in Delaware, they're not taxed. But what makes it even nicer from the corporate standpoint is not only are they not taxed in Delaware, so it escapes taxation, but also those same assets can be used to create a tax deduction in the state in which the company is doing business. And then the other part that's also so sweet from a corporation standpoint is if you have a corporation that's registered in the Caymans or in another area, at some point, you're going to have to repatriate those earnings back to the United States and pay taxes on it. But if you sort of have these intangible assets in a Delaware corporation, it's between the states. It's one state sort of allowing a corporation to reduce their taxes in another state. There's no repatriation. Once you get that tax break, it's permanent. And so the issue of the Marcellus Shale companies came up. And one of the things is that with all these new Marcellus Shale companies coming up in Pennsylvania, you have about 400 of their subsidiaries are located in Delaware, so that the intangible assets of those companies will not be taxed and can be used to reduce their tax bill in Pennsylvania. Now, there's been an academic study that shows that within the last decade, about $9.5 billion was saved by corporations or lost in terms of tax revenues, however you want to look at it, through the Delaware loophole. And in Pennsylvania, there was a group there that estimated that the state had lost about $400 million of tax revenues because of this, and that was before the Marcellus Shale companies come in. And as one last note on this point is the one that I love, which is the sort of the poster child for the Delaware loophole, is WorldCom. If you remember, WorldCom sort of went down in flames, spectacular bankruptcy. Well, WorldCom had saved billions of dollars on its interest on its taxes in other states because of the Delaware loophole. And their intangible asset was something called management foresight. So the intangible asset was the brilliance of this corporation. Well, it was the brilliance of this corporation that, of course, caused it to crash and burn, and yet that so-called brilliance was, saved them billions of dollars. So, Rebecca, you might have some more refined comments on my sort of mangled description of the Delaware loophole.
I think you did pretty well. The Delaware loophole is actually what S.C. Johnson was using. So the 50 states most of them impose some kind of corporate income tax. There's a few that don't impose any corporate income tax, like Nevada doesn't, for example. Delaware does have a corporate income tax, but it has some very loose rules compared to a lot of the other states. So some of the states are fighting back with different ways that they're reforming their own tax codes. But Delaware has a corporate income tax, but it exempts from that tax companies that only hold intangible assets. So if your assets are loans, patents, leases, royalty generating assets like a trademark or something like that, then you're exempt from corporate income tax in Delaware. So companies are putting subsidiaries in Delaware to hold those assets, and meanwhile they're generating deductions back in the state where they're located and doing business, and maybe all the other states, maybe they do business in all those states, and they're generating a deduction for paying those royalties to the Delaware subsidiary. Then the Delaware subsidiary, ends up with all this cash, and they loan it back out to the parent company and to other subsidiaries, which generates interest deductions for the parent company and the other subsidiaries operating in other states. So it just sort of perpetuates itself. It's a huge problem, and it only affects what these companies are paying in state-level income taxes. In order to avoid the federal-level income taxes, they need offshore subsidiaries, which they also have plenty of.
I'd like to add something here. Many of you have read about what HSBC has been involved in and the problems of HSBC, but if you start poking around in that, you begin to realize that there are two different realities in a corporation of any size. Reality number one is how it does business. If you were to talk to somebody who worked for HSBC, they'd say, I work for HSBC. And it wouldn't matter where in the world they were. And their line of reporting would be through divisions, regions, up to a central headquarters. They have really no awareness of the number of subsidiaries, the corporate structure. The corporate structure only comes rolling out when one of two things happens. A regulator shows up and says, maybe three things. A regulator shows up and says, what are you doing here? Well, you can't look at that because your regulatory framework is limited to looking at the bank, and we have a brokerage firm. Never mind that both operate seamlessly, and if you're a customer, they'll take care of everything. But when the regulator shows up, it's two different businesses. Get your butt out of here. So that's one problem. The second problem is liability. When somebody shows up and they want money back, or they want to go after the corporation because they've done something wrong, well, you see, you're suing subsidiary X, and that's got nothing to do with what the other subsidiaries were providing services, and that's a separate business, and you have no jurisdiction, and blah, 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 and there's no way to get your arms around it. And then finally, there's the question of tax, where once again, if you come along and you're a tax collector, you run into this huge maze, even though it's a single entity and it behaves like a single entity. Now, to the point of the agriculture and the lack of capital to really do what has to be done in agriculture, it's no surprise that the major companies involved in grain trading are all companies that are totally opaque, privately held, hundreds of subsidiaries. To the extent you can actually find one that's listed, you get hundreds of subsidiaries, and they're all set up in a way that makes understanding what's going on in them or tracking the trades a virtual impossibility. So this business of the anonymous corporation that is now rolled into some large entity is an enormous problem, and the SEC has walked away from it. The SEC has allowed corporations to say that the effect of the subsidiary is not material, and then simply not report what's going on or what happened there or how they're using it. So we have this kind of black hole system for cops, regulators, tax collectors, whereas when the company does business, you're dealing with the company, the management, and the control is absolute.
Okay, questions? I thought I followed that. Yes, please identify yourself, and do we have a microphone, Nathan? By the way, Nathan is in charge of everything. He makes this happen.
Speak loudly.
Okay, here, speak into this because we are recording it and everything is on the record. Turn and face your friends.
Well, I consider all of you my friends. But by way of my name is Martin Lobel, and by way of full disclosure, I was a partner of Jack Blum's.
I'm sorry.
I know. And I'm also chairman of the board of Tax Analysts, which publishes international tax notes, state tax notes, and we're on the web at www.tax.org and tax.com. And one comment and then question to Leslie. The solution to the problem of international taxation is very simple. It's the adoption of unitary accounting principles, or also known as formula apportionment. Essentially, if you have 10% of your 10% of your people, 10% of your sales, and 10% of your property in a particular state or country, you owe 10% taxes on 10% of your total income. It's a very effective, very simple way, eliminates all this foolishness of transfer pricing and so forth. And indeed, the Supreme Court in Barclays ruled that it was actually a more accurate way of accounting for principal and profit. Instead of that, what we've gotten is a real push for what's called a territorial system. And Obama finally, 3 years late, has discovered it's bad. The domestic corporations who have to compete with the multinationals, and I don't say American multinationals, they're multinationals. They don't know boundaries. Wherever they can make a buck, they're going to make a buck. The multinationals have been pushing for this territorial system under which they will never have to pay a tax on any foreign profits and will encourage a shifting of jobs and profits abroad. Where are the domestic corporations, you might ask? Because they're the ones who have to compete against the multinationals who don't pay taxes, and they have to pay taxes. California has one version of it. It used to be worldwide. Under pressure from the large corporate funders, it got limited to water's edge. My question is, why isn't the press covering this? There have been a huge number of articles. We've published, Lee Shepard, Marty Sullivan, with reams of data. It's on the web, it's free. Neiman Watchdog, Barry Sussman runs it, has put on a whole bunch of articles about what this really means to the Americans. And you search all the newspapers, TV, the so-called serious papers like the New York Times. Where are the stories? David's doing fairly well, but he's one man.
He's at Reuters now,
Oh, did he leave for Reuters? When did that happen?
a couple of years ago.
No, not David K. Johnson. David
David Kay.
David K. Not David K. Johnson.
Yeah.
David is now head of IRE, too.
Yeah.
Where's the coverage? All right,
Can
no.
you give name, last names for these journalists? Can you?
Well, Johnson is David K. Johnson, and David Kaczynski or whatever. I can never.
What?
Kochaneski.
Okay.
Kojaneski.
Kozaneski. You go on the New York Times website, you'll find them. But they're the only ones who are reporting it. What does it take to get journalists to cover these issues, which are really important? They affect everybody in the United States and around the world. And where's the coverage?
You're looking at me.
Yeah, you.
You're looking at me.
I think that question was addressed to Leslie. I could be mistaken.
First of all, it's a little tough to speak for the whole journalistic community, and I certainly do not speak for the New York Times. But as a practical matter, we hear this a lot. We hear this a lot from any number of groups, whether it's tax groups, whether it's whatever people's interest is, whether it's a religious interest, whether it's a financial interest, whether it's interest in covering all these different areas. There are so many people who say, why aren't you covering my particular issue? And, it's a question of resources. It really is a question of resources. Newspapers are cutting back, publications are cutting back. Taxes in particular are very complicated. I mean, in order to cover taxes, you really have to understand taxes. It's a very complicated it's a complicated story. The New York Times has done a lot of stories. They also did a lot of stories about Apple and Apple's offshore. I think it was David Barstow did that about Apple's offshore tax schemes. So I think so I think the Times has done a lot. But it's like there's on any given day there's X number of things that have to be covered, and a whole variety of people. And like people talk to why don't we cover enough about climate change? Why don't we cover enough about something going on here, something going on there. So it's an ongoing issue, and it's an ongoing balancing act, and it becomes the judgment of the editors of whatever publication with, what are their priorities with the resources they have at hand. And some of their priorities may be different than your priorities, although I personally agree there's a lot of juicy and interesting stories there.
Okay, this young man here, who are you?
Oh, sorry. My name is Christopher Krause. I'm at the National Environmental Education. My name's Christopher Krause. I'm at the National Environmental Education Foundation. To follow up on that, I report on climate change, which is a similar issue in terms of it's very complicated, it's potentially juicy. In this whole panel, I don't think I've heard one analogy in terms of like how the system works. And one thing that I've found to be very useful when communicating to non-specialists about something that's complicated is forming analogies. So to sort of follow up on that, are there good analogies for what's going on here in terms of how do you explain these complicated, because I mean, Jack, with all due respect, if somebody who was of I got what you were saying, but I think for most people it's going to be really hard to kind of follow the sort of complicated nuances that you're describing. So just a general comment, the more analogies you can use for these sorts of things, I think that the easier it's going to be to communicate.
Follow the money.
Follow the money, there's a good analogy.
I'm going to insert
Giant
there.
game of hide the ball.
Yeah, I'm going to insert here. Is there a reason it's so complicated?
Ooh.
Yeah. Let's get to a couple more questions on the floor for the panelists to play with. The woman in the red sundress. I know.
I'm Karen Ornstein with Friends of the Earth. I had a question for the whole panel. And this is something that Friends of the Earth US and ActionAid we've been talking about, and others, is in the climate finance world, we're trying to get people talking more about tax evasion and tax avoidance, and as a potential source of climate finance, in the same way that financial revenue recovered from financial transaction taxes could be a source, or shifting of fossil fuel subsidies, and then there's other things. But the question I have, and that we get all the time, and I don't know if there's an easy answer, and I'd love your thoughts on this, is how do you make the link between, cracking down on tax dodgers and then that money being used for climate change? And it could be the same thing for healthcare, or, lots of good causes, and both as an advocacy piece and sort of as a technical mechanism.
Okay. Hold your question. We've got two tough ones. We're going to start down the line, and I get skipped because I don't have the answers.
ActionAid did a fabulous report about a year and a half ago looking at SAB Miller. That's the world's largest brewery of beer that has, not surprisingly, subsidiaries all over the world. And it looked at their operation, was it in Ghana? I think, yeah. And so they have this brewery in Ghana that's very successful, makes a lot of beer, doesn't pay any tax because it buys its bottle caps from a subsidiary in Mauritius. It pays management fees to a subsidiary in Switzerland. It pays royalties to a Luxembourg subsidiary. And so the woman who owns the little grocery liquor store next door to the brewery pays more in income tax than the brewery does. And I think those kind of stories are incredibly powerful. And how they did that report is just amazing. I mean, I don't know how they got the information that they got, but we need more of those kind of stories to get the message across. I mean, one of the things that, we're working on a lot of tax issues now, but we're framing a lot of the tax fights as not having revenue to do something like fund climate change or pay for food stamps or whatever else it might be, so that you can give tax breaks to millionaires. Now, that sounds like an individual thing, but corporate owners are primarily very wealthy people. Over 82% of dividends go to people in the top 20%. 67% of capital gains are earned by the top 1%. I mean, corporate stock ownership is concentrated in the hands of the wealthy. So whenever corporations are able to avoid tax, that goes to the pockets of those millionaires. So we try to frame Grover's pledge that way. It's a pledge to protect the 1%. If you're not going to raise taxes on corporations or millionaires, it's a pledge to protect the wealthy at the expense of everybody else. Christian Aid did another fabulous report on how tax evasion is taking money out of developing countries. And they looked at bananas produced in Guatemala or somewhere in Central America and sold in England. And for every pound, and I mean currency pound, of bananas sold in the UK, the price to the grocery store was about 60 pence. And about 39 pence of that was eaten up in grocery store costs, and they had 1 pence of profit. The cost of producing the bananas in the country of origin was 12.5 pence. So somewhere between 12.5 pence and 60 pence, 47.5 pence disappeared. Well, they found where it went. 8 pence went to a Luxembourg subsidiary for financing. 17 pence went to a Bermuda subsidiary for help with distribution. Because it's, distribution, shipping bananas from Guatemala to England is really tough. You have to route it through Bermuda. And the list goes on. There were about 10 subsidiaries, all located in tax havens, where they had paid all of these different expenses to before they sold the bananas to the UK. And these kind of stories, so they have a graphic, of the banana split up and where all the pieces of it went. And these kind of stories, I think, make it easier for people to understand. On the apportionment issue, I would say the toughest problem is the OECD and the Model Tax Convention, which establishes an arm's length transfer pricing standard as the norm, and specifically rejects in their preamble an apportionment system, saying it's, which we don't buy, but they say it's unworkable, there'd be all these different systems. Well, corporations here in the U.S. have been dealing with 50 different systems for a long time, and they seem to have managed it just fine. So I think that's completely bogus.
It's changing. They have actually proposed to the State Department that we jointly consider unitary.
Yeah.
Be awesome.
Well, to make a couple of points. First, the thing that I find most startling is that all kinds of people talk about reforming the tax system without ever actually having looked at the tax returns of a major corporation. Now, I'm talking now about the Senate Finance Committee, the House Ways and Means Committee, even the people at IRS who don't really look at the corporations or understand how they've manipulated things, because a typical audit consists of you put this on your return, here are some 10 things we think are wrong, let's compromise. And the compromise is usually tilted to the corporation. Nobody ever really dissects what went on. So how do you get a General Electric for 10 years making maybe $100 billion in profit over a 10-year period, paying nothing and getting refunds? How can you reform the system without looking at GE's returns? Now, I would argue there is no excuse for these corporations' returns not to be public. There's a lot of crap about competitive this, competitive that, but if they publish financial statements which are used by investors on Wall Street, which are picked apart, the 10Ks are picked apart by financial analysts, why isn't the general public entitled to see the tax return? And most certainly, why isn't Congress? And their refusal to actually look at facts is shocking. OECD talking about, well, we're going to reform transfer pricing. The one thing OECD has never done is look at actual tax returns. They have no authority to, but they haven't even asked for them in the context of saying we're going to reform the system. So the question is, why all the secrecy? And why don't we get some of that out in public? Now, there's one other point about OECD. OECD was set up because it's specifically politically unaccountable to any set of voters anywhere. And the way OECD works is many of the corporations provide advisors to the OECD delegations. And my first time working for the Senate, discovering all of this, was realizing that individual corporations may have had 3 or 4 of their people on 3 or 4 different country delegations. Now that ought to shock and appall you, but that's how OECD works. So then the question becomes, who made them God? And where is the accountability? And when are we going to start talking about it and say enough's enough?
And the answer to your question.
I pose it to the world. I will finally say on the one point about journalistic coverage of all of this. Believe it or not, we have broken through. 10 years ago, it really was that nobody would write about it. But I will tell you now, journalists from all over the world, filmmakers, all kinds of people have discovered taxation as a serious issue. And it's come about because there's no revenue for anybody for anything. It's not a question of climate or agriculture or whatever. It's, my God, we've reached a point where these pigs have taken everything, and the only living taxpayers are probably the people in this room who are withheld at the source.
Okay. Liana?
Yeah, just really quickly, I think I completely agree with Rebecca that actually the impact of stories is very powerful in showing both the unfairness but also the absurdity of what is going on. And obviously, both within the U.S. but also internationally, when you're looking, at how the powerful, in that case, then the corporations are actually able to get away with tax dodging, while, for example, as you mentioned, the small shop owner in Ghana does not, who has a lot less income, is fighting for his or her survival. And I think those kind of discourses, and also maybe starting to connect some in solidarity between people here in the United States that are affected and are not given, the public services that they need because corporations, are withholding taxes or get very generous also tax subsidies. I mean, that's the other part of it. I mean, for example, extractive industry to this day continues to get tax subsidies. It's not even a matter of tax evasion or tax avoidance. They are subsidized from the get-go. And I think we need to kind of get back to the discourse about transparency and accountability being really the fundamental tenets of democracy. If we don't want to completely undermine democracy, if the United States is going out and preach democracy in other countries, we need to do what we are telling others to do, other countries and other political actors. And so wherever public finance or public subsidies or, the public setup of rules, advantages, private finance, they actually should be forced to disclose. They shouldn't be able to hide under the tenant that, what they are not disclosing is because of business confidentiality and proprietary.
Thank you. Leslie?
I'll take up 2 points. First, the lady's point about the use of the resources. If you look at a situation like the Marcellus Shale companies, number one, first of all, in defense of Delaware, the Delaware loophole is not Delaware's problem. It's a problem of every other state that doesn't enact legislation within its own states, something called combined reporting, which would close the Delaware loophole and disallow those kinds of deductions. So in defense of Delaware, that's not their problem. But to your point about the Marcellus Shale is that, for instance, let's say the Pennsylvania legislature closed did not allow these deductions. So the revenues would come in from the Marcellus Shale companies. Well, what do you think the Pennsylvania legislature is going to do with that money? Do you think that the Pennsylvania legislature is going to take that money and use it for remediation of whatever when they've got, firehouses and schools and everything else that's being closed? So the fact that, somehow that the thought that if you close this loophole, that all this money will go for the good things that you're interested in, I don't see that happening. Secondly, the point about anecdotes. I disagree with that point. I mean, everybody's got different literary devices, and maybe the anecdotes are a good way of... Analogies. Anecdotes I actually like. Analogies. I think analogies can be quite confusing. And as a writer, this is just personal, just a personal aside, I prefer specificity. And I think that if you take complicated situations and you really understand them cold, but you really have to understand them cold, and to explain them in a very simple terms, the essence of those things, I think that's a more effective way. And I also like the specificity of examples. For instance, I think one of the interesting things about Delaware, the fun part to me was all the bad guys that were setting up shop there. The guys from Eastern Europe that were, embezzling money from privatized industries, and somehow that money ended up in Delaware. So how does somebody sitting there in Bulgaria know, how to get this into Delaware? That kind of thing is interesting. So I think it's that level of specificity as opposed to saying, well, it's kind of like this. But everybody has their own literary devices when they write. So that's just my own personal note in terms of my own preference.
The two approaches aren't mutually exclusive.
Okay, good. We got a little disagreements going on here. Someone over here had their hand raised. 1, 2, 3. Down there.
Oh.
Yeah, light blue shirt. There.
Thank you. I am Manuel Perez Rocha from the Institute for Policy Studies here in Washington, and I am a Mexican national. And obviously, we suffer a lot in Mexico from illicit transfer of funds, in particular from Mexico to the U.S. I'm sure many of you know the great report that Global Financial Integrity published a few months ago, and also Christian Aid has done a lot of information on it. But I was wondering, in terms of, and I hope I'm not changing the subject a lot, but in terms of Delaware, how much of criminal activity or criminal capital or illicit funds end up in the state of Delaware? Because so far, during this great panel, most of what's been talked about is licit funds, whether they're good or bad or whatever, but they're licit, mostly, no? But what about illicit funds from criminal activities, and in particular from narco traffic, end up in Delaware? I don't know if there is information about that, but maybe you have some insights about it.
Okay, just a minute. Just to say that Leslie has been talking about illicit flows from Eastern Europe and so on, but good point. Who is the other person? Oh, Navin, and then Jasmine. Okay, go for it.
Does any member, sorry, my name is Navin Bikari, I'm with George Washington University Law School. Does any member of the panel have any view on whether, and if so, how the FATCA addresses some of those issues?
Katka?
FATCA,
Okay.
Yeah,
foreign account tax.
yeah.
whatever.
We'll get
And
that.
the second part of the question is, whatever happened to Senator Levin's Stop Tax Havens legislation? Thank you.
Okay, very specific questions. I want to say that Navin used to be on the government of Mauritius Corruption Commission, Anti-Corruption Commission. So if you want to know about corruption in Mauritius, he knows all about it. He also has worked for the IMF as a technical advisor to governments in Africa on how to reduce corruption. Okay, over here, please.
Jasmine Huggins, Churchwell Service. Actually, I had 3 questions and 2 have just been asked. I was going to ask about the international instruments which we have to now deal with corruption, and I'm speaking specifically about the UN Convention Against Corruption. And is that does that provide a possibility at all to deal with what the illicit flow of revenue? Then I wanted to ask Leanne, you mentioned that there is a bill currently before Congress. I wanted to just get more information about that. You don't know more. Okay. And just a question about communication and how we communicate to the general public on these issues. I think I'm sort of halfway in the middle between Jack and the person who spoke. I think those of us who have dealt with tax have struggled with the issue of how do you communicate it to a public which is not familiar with these issues. And I just want to throw out there that we are in a different place now because of the Occupy movement, because of resistance in Spain, because of what's happening right across Europe. The public is now much more aware than ever before. And perhaps this provides an opportunity for new strategies and new communications efforts to bring more people on board. So just a comment, not a question.
Thank you. Thank you all. Leslie, may we begin with you, and then we'll work into the left?
Sure. There's a bunch of questions and comments that I'm not in a position to answer, so let me just talk about the ones that I feel a little more comfortable talking about. To the point about illicit funds and narco money and money going from Mexico into Delaware corporations, the whole point of setting up a Delaware shell corporation is to hide your identity. So there are no questions asked, there's no names, there's no accountability. And the beauty of setting up a Delaware shell corporation is that unlike setting up shell corporations overseas in the Caymans or Jersey or some other places, it has the patina of the United States. So if you're a bad guy doing bad things, and we'll use bad guys in Mexico doing bad things, and you want to launder that money, it looks good to have a bank, when you want to open a legitimate bank account to get that money out, it looks good to have your corporation registered in Delaware. But that's the whole point. Everybody, law enforcement people would love to have that information. People who are interested in trying to clamp down on narco, they would love to have that information. But the whole point of why the bad guys go there is because people will not get that information. So there's no line item that you can see, narco traffickers registered in Delaware. That's not going to exist. It would be nice, but it's not going to exist. And in fact, even just getting the information about the Eastern European guys was based on some groundbreaking reporting that took place by journalists there, and also because some of those people were arrested and it came out in the court cases. Senator Levin for 3 years, 3 times in a row, has tried to promote legislation to enact beneficial ownership, where you identify the beneficial owner of the corporation. That legislation has not gotten out of committee because it's been opposed by the secretaries of state in so many of the states. It's been opposed by the state of Delaware. It's been opposed by the American Bar Association and the Chamber of Commerce. Their opposition is that they feel that this will clamp down on capital formation and clamp down on business development. Senator Carper is from the senator from Delaware, is slated to become the next chairman of the committee that will be considering that legislation if the Democrats retain control of the Senate. So I think that the chances of the beneficial ownership legislation seeing the light of day, if you're going to be doing Monday morning well, not Monday morning, it'd be advanced quarterbacking, would be pretty low. But things could change.
Thank you, Leslie. Liana?
Really don't have that much to say. I mean, particularly on the 11th Senate effort, I know that groups like ActionAid, like Friends of the Earth are looking into the matter. I don't think, as Leslie indicated, there is a lot of hope under the current political climate to advance it. But by the same token, I think it's very important that, a senator or two senators are coming out and making the stance and making the link, both in terms of, benefits nationally, but also with a view of some of the international impacts. And so maybe it's just a matter of, having a couple more groups go into that or popularize it or kind of publicize the effort that is going on.
Thank you. Jack?
Well, first I'll talk about the problem with the bill and why it won't go anywhere.
Give the name of the bill.
We're talking about Levin's bill, or for that matter, any legislation that will seriously dismantle the current system. And here's why. The most coveted committees in the Congress to be on are Ways and Means and Finance, because they are the best single committees from which to raise money. To get on those committees, you pledge to the leadership to kick a certain amount of the money you raise back to the senatorial and congressional campaign committees of your party, and that gets you your seat on the committee. 16 guesses about why those guys don't vote against the people who gave the money. And of course, this is all very non-transparent, because the way these bills get cooked up and written and worked over with technical advice from people who are not coming from where we are is quite remarkable. So I think that's why we have a real legislative problem. Now, on the subject of Mexico, we know illicit funds are pouring into the U.S. from Mexico on a vast scale. And in case anybody ever had any doubt about it, all you had to do was see the reaction of the Florida banks when the IRS proposed that those banks really find out whether foreigners owned accounts there and then collect information and report it back to IRS. The bankers said, we're dead, we won't have any money. Well, what were they afraid of? Well, this was all money coming from Latin America and Mexico. And the IRS proposal, which they are sticking to, will require the collection of that information and the transmission to IRS. Is it a perfect answer? No, but my God, we may have some data. Now, as far as the use of corporations to launder money, a couple of years back, I was in Panama at a money laundering conference in Panama City. I call it a money laundering conference. They said anti-money laundering, but from the look of the people who were in attendance, my guess is it was find out the latest techniques for getting around what was going on. And one of the speakers proposed that the best solution was a Delaware corporation, because you could set it up easily, you could open a bank account anywhere, be no problem, and you were in business. Now, is the money in Delaware? The answer is no. The money is wherever the money is, and that's wherever you, the owner of the account, want it to be. It's the corporation that's in Delaware. The money is perfectly movable, fungible, goes everywhere. Now, as far as FACTA goes, FACTA, this foreign account effort, was a scheme the Treasury came up with to deal with its shock in discovering that tens of thousands of Americans were not reporting their foreign bank accounts and their foreign income to IRS. So Treasury came up with this brilliant idea of imposing a tax on any financial institution that didn't report Americans who were cheating on tax with them overseas. And this is kind of a draconian law. The regulations are in process of being massaged. I don't know how they're going to come out. If it works, it may have a significant impact. But you ought to hear the screaming and the moaning and the upset of the various bankers at the notion that they're going to have to identify U.S. persons who are evading. And here's the beauty of what has happened. The foreign governments who are the governments supporting the banks that are caught in this web, like the government of Switzerland, the government of the UK, whoever has Americans who have bank accounts with them, are now in the position of saying, well, if you're going to do that to us, we're going to do that to you, which is why IRS began collecting information about foreign account holders. And if this begins to take shape, it may mean that the game of setting up an offshore account really gets hit hard. Of course, between here and there, there's an awful lot of ground for this to mess up. And there are all kinds of possibilities for intervention in the reg writing process and in the mechanics of what's going on. So don't take the money to the bank quite yet, but it's a very positive development. Finally, UNCAC and the provisions of UNCAC. I worked for a long time. UNCAC is the UN Convention Against Corruption. I worked for a long time to try to get this convention off the ground. Actually, I first drafted a convention like that in 1976, referred to at the UN as the disaster of 1976. I worked again at the UN in Vienna on coming up with some proposals, and a very seriously watered down version of it finally became an international convention generally accepted. But the convention is hortatory, which is to say it's an expression of what we'd like various countries to do. And whether or not the countries are doing it is something that each country is supposed to report on the other countries to say, you know, are you guys measuring up? So there's this complicated schedule of Bulgaria will check the United States and Russia will check Syria. Who knows? But that's how this thing is set up. And I sat in an UNCAC meeting 2 years ago where the argument that was going on was, would civil society be allowed the opportunity to participate in the evaluation of whether they were complying with the treaty, whether the self-reporting and evaluations would be made public, and the whole question was so bizarre because if anybody was serious about this treaty, this wouldn't have been an issue. And the final thing is why countries don't work together really on sharing information about the people who are stealing their countries blind is really quite beyond me. As of today, to the best of my knowledge, Egypt, Libya, are two stunning examples of countries that have not asked for legal assistance in tracking the money that was stolen by the previous regime. Now, Mubarak is said to have hit 40 billion plus, and that would be Egypt. And then if you look at Libya, Gaddafi, 20 billion, 30 billion, whatever, who knows, because we don't get reports on that, but they haven't asked for any help either. So, and they haven't even begun prosecutorial efforts which would enable them to begin a process of asking. So what are we to say?
I think I'm discouraged. I was encouraged when you talked about FATCA. Now I'm down again. Okay. Rebecca.
So I'm going to start with Jo Marie's comment that the IRS has her number.
It does.
The GAO issued a report in 2008 that showed that if income is subject to a high level of third-party reporting, so for example, you earn wages, your employer sends the IRS a W-2, that income is correctly reported on the recipient's income tax return 99% of the time. But if you have income not subject to a high level of third-party reporting, say you own an apartment and you rent it out and you're the landlord, and that doesn't get sent to the IRS on any kind of form, you report that correctly on your income tax return only 46% of the time. So the efforts in FATCA, the Foreign Account Tax Compliance Act, and the IRS's non-resident alien interest regulations, which are the flip side of FATCA, those are aimed at getting some third-party reporting in place so that we know who's got accounts where, and we know if they have earnings on those accounts, and we can match that against their tax return, see if they're reporting on it and paying tax. If you're interested in these issues, you really need to join the FACT Coalition. The Financial Accountability and Corporate Transparency Coalition is working really hard on these issues. We testified in favor of the NRA regs at the IRS, and
NRA.
the non-resident alien regs, sorry, at the IRS, and again in front of Congress. We helped on the FATCA bill. Senator Levin has two very important bills that we support, the Stop Tax Haven Abuse Act and the Beneficial Ownership Bill, which is called the Incorporation Transparency and Law Enforcement Assistance Act, which we've been working very hard with those offices on. So we can use all the help we can get. I think, with the issue with those bills not getting anywhere in Congress, the best suggestion I saw the last year was Thomas Friedman saying that members of Congress ought to have to wear a NASCAR-style uniform that has the logo of all the corporate donors on it. Wouldn't that be fabulous? The Incorporation Transparency Bill actually looked like it was going to move about 18 months ago, and we really thought it was going to get out of committee and might even get up for a vote, and Senator Carper from Delaware managed to block it. So while Leslie said the Delaware loophole is not Delaware's problem, I want to call Delaware out and say Delaware is everybody else's problem. And I use Delaware as a proxy for any jurisdiction that has rules like this that enable tax havens and corporate opacity and stuff like that. And Delaware has a long history of it, right? Delaware was the first jurisdiction that allowed credit card companies to charge interest rates of 30% instead of 12% or 18% that most other states had in their usury laws. And the bankers didn't just lobby Delaware legislature for that. They wrote the statute. The bankers wrote the statute. And Delaware has a long history of being a parasite on the rest of the U.S. in all kinds of ways, in credit card rates, incorporation opacity, tax rules that favor corporations. And it's not just that Delaware is taking revenues that should belong to Pennsylvania, for example, in the Marcellus Shell companies. Delaware is taking revenues out of the system because Delaware is collecting less revenue than Pennsylvania would collect on that income. So you hear a lot of people defend tax havens by touting the benefits of competition, right? Well, competition is good if you're producing a good or a product because you get a better good at a cheaper price. But competition between governments is not a good thing. It's a massive race to the bottom. It's who can collect the least amount of tax and provide the worst services, the worst school system, the worst roads, the least amount of fire and police protection. Competition between governments is a terrible thing. What we need instead is cooperation between governments, and And that's what the agreements are about, just reached between the U.S. government and 5 European countries to help implement FATCA on a nationwide basis instead of at the financial institution level. That's what the automatic exchange information agreements that are happening among some of the bigger countries are. It's going to really take a concerted, coordinated effort between governments at all levels to combat this problem. And as long as we have those governments who are making money at everybody else's expense and people defending that, it's going to be tough to shut that down.
I hate to do this after that brilliant intervention, Rebecca, but on behalf of the state of Delaware, why is it that the states, I guess it's related to where the fact that you get incorporated in a state instead of in the United States of America, but why doesn't the IRS collect the information on corporations the way they do on individuals?
Well,
like me.
an entity like a corporation and a partnership or a LLC only needs a tax ID number, a tax identification number, like your Social Security number, if they are doing business in the U.S. or want to open a bank account in a financial institution in the U.S. A lot of those companies that are formed in Delaware never do business in the U.S. And they don't have financial accounts here. They have a financial account in the Cayman Islands or in the Bermuda or
I thought you
somewhere
said
else.
they could get a bank account in the United States really easily.
No, anywhere.
Anywhere in the world. And the fact that they're a U.S. company gives them, as Leslie said, that patina of respectability that they wouldn't have if they went in with a Bermuda company or something.
But I thought you were in I'm sorry, if is no one else confused? Wait a second, I've been being very quiet for me, so just 1 second. I thought the reason you were in Delaware was to protect you from other state taxes, but then you can have this arrangement that Leslie said, some comparative, composite.
I mean, the combined reporting.
Combined reporting. Okay, so you can get around Delaware if your state requires combined reporting.
So, right, but if you're an arms trafficker, for example, you're not doing business anywhere in the U.S., or at least not through Citicorp, right? I mean, you're doing it using a Delaware corporation, but the money's flowing somewhere else. It's not, the money is not in Delaware, and the business activity is not in Delaware. It's just that that's where your entity is formed.
Let me try to clarify something, which is there's two separate issues here as it relates to Delaware. One is the issue of shell corporations, which are corporations that are set up to hide what you're really doing. And those are the bad guys doing bad things. And then secondly, as a separate, sort of somewhat related but separate issue, but a separate issue is the issue of taxation and why major corporations, legitimate corporations like Apple and Google and everybody else under the sun would register in Delaware or have subsidiaries registered in Delaware. So there's two different issues. The bad guys, like, maybe your narco traffickers, are coming into Delaware not because they want to avoid the payment of taxes somewhere with their multinational subsidiaries. They're putting their money in Delaware to hide their activities and to then legitimize their activities and to get their money into the legitimate system so they can go around and buy their big boats and their fancy cars and all those things that narco traffickers buy. That is completely separate than other corporations. And when we talk about like the Marcellus Shale companies setting up business, there's any number on that side of tax evasion, there's any number of different kinds of things that can be done. The Delaware loophole was just one thing that I was talking about. But I also wanted to respond to the point, since you were calling me out a little bit, I guess the point that I was making is that there's two, when I said it's the other states' issues, not Delaware's on the Delaware loophole, because that's a state level issue that would be, solved by if other states enacted combined reporting, which is different than Delaware's opposition to, and very effective and vocal opposition to what's taking place in Washington in terms of trying to get federal legislation passed on beneficial ownership, which would be, and the beneficial ownership issue is related to the shell corporations. It's trying to bring, trying to put about some, trying to identify who the bad guys are.
Okay, all right. Okay. Jed? Oh, did someone up here want to talk?
I wanted to
Jack, and
throw
then-
a couple of
and then
things
Jed.
out.
And then Naven.
We have a couple of issues here that really haven't come up. One is the problem of the race not only to give away tax revenue, which is Delaware, but then to absolutely subsidize corporations. So we've got the bizarre situation of states competing to see how much money they can give corporations to open a plant.
Hey, Liana said that.
Well, but the degree to which this goes on is what's so shocking. And there's a doctrine that the Supreme Court has come up with called the Dormant Commerce Clause doctrine, which prevents states from interfering with interstate commerce by imposing a tax.
Dormant what?
Commerce Clause.
Dormant.
Now, I've suspected that the reason Roberts ruled the way he did in the healthcare case was because at some level he was afraid that if you went down the road of talking about what states could and couldn't do, God, they'd really get after this Dormant Commerce Clause way of blocking state taxes, because corporations are suing all the time to prevent states from imposing various kinds of taxes because it would interfere with interstate commerce. This business of competition among the states, there was a case brought where that was going on, and somebody said, hey, if it applies to taxes, it applies to subsidies. Supreme Court said, no. You can do all you want to subsidize corporations. That's not an interference with interstate commerce. The logic is completely nuts. This business is something that will have to be addressed. And it has reached the point where some states, I believe Illinois is one of them, to persuade a company to move to Illinois, they have given the company the right to keep taxes withheld from their employees for the state of Illinois for themselves.
What?
That's correct. True. Now, if stuff like that is going on, it is breathtaking. And somewhere along the line, we collectively have to make a stand and say, we're not here to subsidize commerce. That what really ought to be going on is they pay for themselves, thank you, and at least pay their own freight in terms of building the infrastructure and supporting the society as a whole. This has become a completely distorted mess.
I'm shocked. Okay.
That was the point.
All right. Now whose turn? I forget. Jed, finally.
Yes, thank you. Jed Schilling, I'm chairman of the Millennium Institute, and I want to thank you. This has been a very interesting presentation, and I'm happy I've learned a lot, and I'm sad that that stuff is out there to learn. But I have a couple of comments that kind of become questions. One, in all the commentary about the Booz-Allen Act and stuff, corporations complain that it requires them to do lots of extra bookkeeping, but it sounds like from what you've been describing, they already do much more bookkeeping than that, and they just have to reveal parts of it. And the second thing is that, sorry if you could comment on that, is that the issue that Joe Marie raised about the IRS is looking at details of individual tax returns, but not of corporate tax returns. Now that the Supreme Court has declared that corporations are individuals, shouldn't they be subject to the same application of this and have to reveal their taxes as well as make their donations? So I think that's a point that should be made. And then my final question, just with this Indiana tax thing that came up, if the corporation keeps the tax that withheld on state taxes, does that mean that the individual has to pay that, or it just gets credited for the individual account, and it's just a subsidy from the state paying back the income tax of the individuals?
Okay. To answer the last one first, the individual pays it, the company keeps it.
But the individual still gets credit for it as withholding with
Yeah.
the state.
That's weird.
But you were going to,
Okay, no.
other questions?
Okay, who else was waiting to speak? Nathan, did you want to speak again? You sure? Anybody else? Going once, twice? Yes, sir. You have to identify yourself. You've been sitting up here on the front row and no one knows who you are.
Thank you very much. Is this on?
Yeah.
Thank you very much. Good afternoon to everyone. My name is Omari Williams. I'm from the Embassy of St. Vincent and the Grenadines. This is an interesting discussion. Actually, the questions that I wanted to ask, some of them were asked before, but I'll ask again and add a few comments as well. Coming from St. Vincent and the Grenadines, a small island state in the Eastern Caribbean, population of 110,000 persons. It's a very small tax base. In the mid-1990s, the government decided, as part of its economic diversification away from being an agricultural dependent economy, along with tourism, financial services was one sector it will diversify its economy around. Around that same time, the amount of revenues and employment generated was promising. Then we were blacklisted by both the FATF and the OECD. We were called a tax haven. We were also listed as a haven for encouraging money laundering. Then in 2001, after September 11th, major changes were made regarding our legislation to combat financing for terrorism, money laundering, narco-trafficking. A lot of banks left our country at that time as well. We totally changed our sector. We were removed from the various blacklists. Also, we also made drastic changes to our legislation because we now market our country as a clean jurisdiction. We don't like to use the term offshore. It's called the international financial sector. Our focus is not just on banking, but international business companies, mutual funds, etc. Over the years as well, and recently I looked at the government gazettes, and because of the legislation which we had put in place over the years, certain companies which are not able to show certain if they don't have certain measures in place, which may gives the impression that they're shady, they're struck off the register of companies. But also, over the years, we have signed tax information exchange agreements with numerous countries, which have us on the gray list of the G20. For countries that adhere to the minimum standards for tax transparency. Also, we have, I believe I'm forgetting something. I have a lot on my mind. But we have made these changes, and then there's FATCA. And with FATCA, we do have some concerns because it just does not only target offshore banks per se, but there are implications for our local banking sector, our credit unions, our building societies, our insurance companies, and a number of recommendations were actually made here about fixing this problem with the issue of tax evasion. We have done our part in the Caribbean, whereby it has even affected our economy. And there's certain reaches which we may have a problem with in terms of our sovereignty. But nevertheless, isn't it what can be done here in the developed countries, whereby in terms of comprehensive tax reform, which is also fair for both the government and the taxpayer, and also which is not an issue which can hamper a small developing country such as mine, whose intention is not to encourage Americans and other persons from developed countries to evade taxes. Thank you.
Interesting, interesting. Okay, let us, I'm going to give you a little bit more time to respond. This will be your grand finale, so say anything you want to say. Someone should talk about unitary taxes. That word came up and it was never defined. So I'm going to start in the middle and work out. So Liana and then Jack and then Leslie and Rebecca, okay?
Yeah, I'm going to be really brief because a lot of the very specific questions I'm obviously ill-equipped and non-capable of answering. But I thought the example that Mr. Williams just gave from St. Vincent's and the Grenadines was very, very interesting because it goes also again to the question of the fairness in the global system. And here, you know, you have a very small jurisdiction with very little opportunities kind of for broadening the tax bases, trying, you know, do what the IMF and others have told them to do, you know, expand into financial services and so on and so forth, and being hit hard by regulation that comes from one of the more powerful countries, obviously, in the system, the United States, whereas, again, the OECD countries, a lot of them, as we have learned, are not necessarily lily-white in terms of dealing with tax evasion and tax dodging as well, kind of trying to skirt the issue. And for a country, obviously, like St. Vincent's and the Grenadines, which I'm assuming, for example, is also very much affected by the impacts of climate change and the fact that, for example, developed countries, including the United States, have not paid what they need to pay according to international agreement to help countries like St. Vincent and the Grenadines adapt to climate change and make sure that they have a livelihood, you know, beyond for the next 20, 30, 50, 100 years. There, I think it becomes clear again how much paying up for those international obligations is part of what you might need to help countries, you know, small island developing states that might now have not few other recourses than going into, you know, offshore, being in offshore jurisdiction to actually deal with their livelihood and a sustainable development that might not depend as much on those kind of banking deals as a non-expert.
Leslie.
While you were talking, I thought it was so interesting because it struck me as though maybe I use the word analogy or maybe the word similarities. It seemed as though there were so many similarities between the situation of St. Vincent and Grenadines and Delaware. You know, Delaware is a small state. You know, it came up with a strategy of going after business and financial services and really sort of focusing the whole strategy of the state and having sort of an open door policy towards business formation to try to bring money into the state. And that's why you see, you know, there's more corporations registered in Delaware than there's actually people in Delaware. So it seemed as though they were coming up with an economic development strategy just in the way that you were. But what sort of diverges is that if you try to do the right thing and you try to say, okay, we want to have an economic development strategy in the St. Vincent and the Grenadines that attracts business, but we also want to stay on the right side of, you know, we want to stay on the right side of the law. We don't want the narco trafficker money, and we don't want to be tainted with that image. But you're competing again with Delaware. So what you found was that as you enacted legislation and as you sort of, as they would say, you know, clean up your act, and then you lost business as a result of it. And where did you probably lose business to? You probably lost business to Delaware and other places. So that gets back to, you know, sort of a global, and, you know, it gets back to the United States. If it wants to preach about activities in other countries, it really has to clean up its act in its own backyard, which gets into the political sphere. Because if Delaware had more, tighter restrictions, well, maybe some of the businesses that might be in Delaware might be in St. Vincent and Grenadines for any number of other reasons. But you're in a very difficult situation because you're competing against a state like Delaware that may have many looser rules, and you may lose business to it. But what struck me really was, sort of some very interesting analogies between two small places trying to come up with a business strategy, and and how what's going on in one place will really affect what's going on where you are.
Thank you. Jack?
A couple of things.
Your last
Let me
words.
start with St. Vincent. Actually, shortly after the money laundering regulations were put in place, I was in St. Vincent to teach a course in how to comply. The truth of the matter is that St. Vincent can't become a major financial center. It just isn't there, and you probably have discovered that. But the real problem that's going to come, and it's a terrible problem for the entire Eastern Caribbean, is the Eastern Caribbean has tens of thousands of dual nationals who are both U.S. citizens and citizens of the Eastern Caribbean. And I don't think any of them have figured out how FACTA and the requirement that you turn over information about U.S. citizens is going to affect your economy or what your banks have to do, or even the people involved, many of whom may not even know that they're U.S. citizens. And that can happen if they get U.S. citizenship because their parents were here, whatever the circumstance. And this is a mess, and nobody has really addressed it. So that's one proposition.
Call Jack, he'll sort it out.
I know some people who've been thinking about it, and it's a hell of a problem. And by the way, I was also in Grenada, and Grenada tried to become a financial center, and the horrible truth was Grenada had no capacity whatsoever to regulate anything. And fraudsters came, and all kinds of people came to take advantage of them. So that's a problem. Now, I want to turn to just two other points quickly. One is IRS's ability to actually enforce the law. IRS gets, on average, around 400 million tax returns a year. If you count up the individual returns, the corporate returns, the excise tax returns, and all the rest of it, 400 million tax returns a year. They get money disconnected from the tax returns, which is to say that people send money in electronically as payments for withheld taxes on employees. The money's flying around every which way. IRS, when asked at a Senate hearing about the number of people who were involved in enforcing the law with respect to international tax, lied and said they had 1,800 people. The true number was closer to 700. They must have been counting, secretaries, building guards, God knows who else. But there really were not very many people. The good news is, since that hearing, they've increased the number, and maybe now it is about 1,800 people. But you lay that against the number of tax returns, the number of corporations. Now, then you look at the computer systems that are involved in trying to match returns with numbers, with other stuff. They've done a remarkable job. Most of the major banks have not done as well as IRS in making their systems work together. Citibank, for example, a zero compared to IRS. But the key point here I'm trying to make is enforcement is a tough proposition. And what does Congress do to support enforcement? They keep cutting the budget. So what did they do this last time around? We have to reduce the deficit, $500 million out of the IRS budget. What? You people are crazy. And indeed they are, crazy like foxes. They know exactly what they're doing. Now, as far as sets of books and accounting, my first encounter with this was when I walked in with a Senate subpoena to a major oil company and started asking questions about their books in connection with an investigation. I discovered they had a minimum of 70 sets of books, could have run as high as 110. There were books for every state, for every country, for different divisions. There were books for management purposes, for capital allocation. It was just magnificent. There were so many sets of books you couldn't figure anything out, no matter how you went at it. And, I started asking questions. Well, these sets of books we were told to create by the accountants for tax reasons. Now we have this management set. So I said, oh, gee, that must be interesting. I'll look at those. So I started looking at the management, and they arbitrarily added numbers to profits in certain regions. I said, what's that all about? Well, we couldn't get anybody to work in that region unless it was profitable. So we had to do an add back so that they would work in that region. I mean, what do these books mean? And the whole concept of accounting has become completely polluted. And I don't trust, at the moment, the books of damn near anybody, because we've been through how many scandals? Enron, WorldCom. I'll take you back to the Penn Central Railroad, which showed a profit of 300 and some odd million the day before it went bankrupt. So there's a real issue here, and it has to do with the accounting profession, its integrity, its honesty, and its purpose. And right now, I'd say it's a pretty tricky question.
What about unitary?
Unitary. Just one. The final thing is unitary was, as Marty described it, an idea that what you did was forget about all those sets of books. Don't even bother looking at them. What you want to know is how many employees are in the state or the country, how much capital is invested, what are your sales in the country, and then you come up with a percentage of that as the percentage of the overall investment, employment, and sales. And now you take the publicly stated profit number and apply that factor to that profit number to come up with what the taxable base is.
Okay, so it's one set of books.
For the whole enterprise.
For the whole enterprise. Right, nothing. You ignore all of that stuff.
Obviously, we can't do it.
Oh, it's a communist plot.
Well, yes, and
I thought it was a terrorist.
I should remind everybody in the room, it sort of slid by quickly. The principal opponent of this was a really honest, upright bank called Barclays.
And they went to the Supreme Court.
To the Supreme Court to fight it, and they lost.
Rebecca, the last word?
I rarely get the last word. This is fun. So just something about the IRS. When we did our corporate taxpayers and corporate tax dodgers report, we poured over the financial statements of the whole Fortune 500. It was a very tedious year and a half. And, GE was in the news a lot, and we gave some background information to the reporter that was working on that GE story. And the GE tax department has 975 employees in it. So think about what happens when the IRS sends out, a dozen auditors, 20 auditors?
10.
What chance do they have against a tax department that big with that many smart, talented, highly compensated people who are also using outside counsel to help them with their tax planning stuff? And then for Congress to keep cutting the IRS's budget, it's just amazing. In Nick Shaxson's book, he tells the story, and I'm not going to get the details right, but of a UK multimillionaire back in the 30s that raised beef cattle in Venezuela and shipped it to the UK. And one of the first to have all these subsidiaries in different countries, and there's one shipping subsidiary, and there's the beef raising subsidiary, and there's the retail subsidiary, and somebody asked this guy who owns the place, well, where is the profit earned? And he said, wherever I say it is, right? And that's the whole problem. That's the whole problem. So as disappointed and discouraged and horrified and appalled as you might be, I do see a lot of reason for optimism, because these issues are finally getting the attention of the public. You know, we had the stories in the last year about Apple and Google and Pfizer and, you know, the multinational stories go on. And then we have the Republican presidential candidate who Jack referred to as the poster boy for everything that's wrong with our tax system. So these issues are getting the attention of the public, and people are paying attention, and I think that things are happening, and it'll be slow and painful, but I do think we'll see some progress.
Thank you, Rebecca. I want to thank you for attending. Before you leave, be sure you signed the sign-in sheet. And I especially would like to thank Leslie for coming down from New York, and even more important, for writing the article. So that started this off. Thank you. Thank you so much for coming.